The week ahead. The graphic that you are looking at represents the ES daily bar for the last 19 trading sessions. I call this session, or this type of action, market trading with no adults in the room. The market is random. A lot of traders lose a lot of money or get very confused because they don't want to accept that. They want to think that there's continuation and more logic to the market than there is. Now, when you have a situation such as we're looking at right now, there's two different scenarios. The first scenario takes place when there's no clear trend to the market. And right now, there's no clear trend. The second scenario takes place when there is a trend, either upward or downward in the market. When you're in the situation that you're in right now, the randomness shows up very strongly. For example, a few days ago, we traded sharply lower the last half hour, followed by a huge rally the following morning. Last night, we broke sharply on the close, followed by a huge rally again this morning. Very random events. When the market is as it is right now, when there's really no trend to it, it is very confusing and it's very easy to get whipsawed, and you're better off to go home flat every night. Now, the second situation takes place when there is a decent trend to the market. For example, let's say the market trend is strongly higher. In that case, if you get one of these random events and it's supportive of the trend, it will usually accelerate the trend. So if it's an upward trend, it will accelerate an upward trend. If it's against the trend, it will usually set the market back shortly, but that becomes a buying opportunity if it's a long trend. Just the opposite is true if the trend is down. If it's a random event that is supportive of the downward trend, it will accelerate the move to the downside in many cases. If it is a non-supportive move of the downward trend and the market rallies, the odds are very good that the market will find that as a selling opportunity and the market will come back to the trend. So it's always good to start off with an understanding, are you in a balanced or trading range market, or are you in a trending market? When I look at the current market, I see a 19-day trend. I'm sorry, a 19-day very weak trading range, and the randomness is showing up tremendously. So there's no change right now until we break out of this trading range that we're in, this trading range. I would expect the randomness to continue. Now, when you look at today, some people can get excited about the day because it looked like a really strong day, at least according to price. If you look at it more contextually, it was actually a very weak day. And I say that because most of the pullbacks to the upward trend were to exacting references. When I see the market pull back to exacting references, that is usually an indication that the buying that's taking place is very short-term traders. And I think that was confirmed by the way the market closed week today. So we've got a long weekend coming up. As we come in to start next Tuesday, I will come into the market with an open mind and just say we're in a trading range market. Come in flat, let the market tell you what it wants to do. Have a great holiday weekend. Bye now.